That's good that you,
Hey, sorry guys, I lost track of the time. That's what happens when I get prepared too soon. When I go start doing something else, and it's like, yikes! Sorry. Let me get the thing going here. All right, let's see. That's recorded. That's good. All right. Sorry I'm late. Hey, it's Cata Tortoise Capital. It is February 5th, 2024. Small group coaching. And let's just go ahead and jump right into it. Uh, who's ready to go? Just give me a quick thumbs up if you're ready to go and be first. All right, let's go. Jeff, let's start with you. If you have a screen to share or notes to share.
Yep. Yes, sir. Sharing the screen now.
All right.
Can you see that?
yep.
Yes, sir.
Okay. Same goals as before. What did I do? As y'all may recall, I'm starting with the PRX system and kind of narrowed in on GBTC symbol, 30-minute with a 50 SMA. And was struggling with TradingView and having to upgrade my license and everything. And I'm already a NinjaTrader. I was telling some of the guys earlier. So NinjaTrader is kind of my visual tool of choice. So I rewrote the system for that, the basic system. Also, I'm planning on looking at and planning on trading with Quant Connect. It's a little bit more of an industrial thing that can do batch things. And so I wrote also the system on that, which is, I know C# you can use that, but most of the examples now are in Python. So um, I'm learning Python as well so I'm writing it in the Python dialect. And I was telling the guys I work with my son to create a Python TradingView order flattener, because that's the PRX system is in TradingView. And when you export the trades, they come in two rows for each trade. One's just a sell, one's the buy, or vice versa. So some of the guys, it took me 30 minutes to do the spec for him, and he says it took 5 minutes in ChatGPT to actually have it cranked out and working. So I think I need to kind of learn that because I am a programmer for my living. So I'm kind of
Mm.
noticing that's the winds are blowing pretty hard there, that you're either going to adapt or be put out of business, I think. So kind of excited about that, a little bit intimidating, but also a lot of options. And I started the trading plan for the PRX system 1, I'm calling it. Ken, you had pointed me that direction last week to one of your
Yeah.
5. So I've started filling that out. This next week, I'm going to add the reentry and continuation patterns. And again, my idea here is I'm going to use NinjaTrader because I want and kind of need a visual benchmark, and
Yep.
then I will continue to use visual benchmarks in when I go live with Quant Connect and paper trading and all that to spot check and things like that. And so my goal is to add the reentry continuation patterns to both of those and then finish the trading plan for the PRX system 1. Aha moments is I was doing a little bit of research, and the PRX altcoin strategy, which is probably the one that got me the most excited about the whole PRX system.
Yep.
It may not be working for me, or it may not, just because of the inability to trade on Binance US in Texas. I found that out, which really sucks. So there's 4 states in the whole nation that you can't trade on. The reason that's kind of an interesting thing is in the PRX class, I think it was Bill Scheit was looking at some 30-minute intraday stuff, and it completely blew his system up. 0.69R round trip is what he ran into when he was actually doing live trading on Kraken. And Binance is quite a bit cheaper. but it's not available to me. So anyway, that's just something I've kind of learned, and I'm processing. That still means I could potentially trade it on day bars, which is how they've written the system.
Mhm.
But you would still be losing quite a bit of. I mean, your stops will be bigger, so it'll be less R, but still, that's a chunk. So that I'll have to do back testing and look at that and see if it's even worth doing when I get there. Um, what do I need? I guess I have a question, Ken, and that is when I'm writing up the crypto trading plan with all the rules, uh, if it was your stuff or my own, I wouldn't hesitate with putting it out there for feedback for everybody or whatever, or, whoever wants to see it. But since this is actually the PRX crypto system that those guys are marketing and selling, my intuition is I probably shouldn't be putting that out there or for this
Yeah,
group.
I think that's to be fair to their intellectual property. I would say, yeah,
That's kind of what I
the
was thinking.
yeah,
So I'll send it to you and if for feedback if I need to or that. But and I've a few more questions in blue. I added a section on here to try to get it a little bit closer, the accountability piece to what you were originally outlining, Ken.
yeah.
But before that, I did a coach's eye. I thought that was smart that I've seen people doing. And was looking at it, and I realized last week I did things I wanted to do, like the programming itself. That's fun. But I didn't do enough background work, which was, for instance, finish the SWOT analysis. So,
Yeah.
George, you were just talking about how good your SWOT analysis did you, and I was laughing because it's like, yeah, I know I need to do it. So it's kind of my commitment, accountabilities. I'll post my SWOT analysis to the boot camp for feedback before this coming up Sunday. And the trading plan we've already talked about not doing, so I won't have that out there. And my only real questions then, Ken, are in blue here. As far as plan, prepare, execute, assess, when you're looking at a system, I know in some of the videos I listened to with some of the other guys, I think it was expectancy, and you've mentioned it maybe even in our group, rolling a 30 and maybe 90
Yeah.
estimative. I think it was expectancy. Is that correct? Versus like,
Yeah, I mean, when you generate the expectancy, you also want to do the system quality number
okay,
because that'll give you um, a sense of the volatility of it as well.
okay, sure.
And all other things being equal, you could have two systems with the same expectancy, but one of them gets all its gains from a couple trades, and the other
Yeah,
one gets increments from a lot of trades, and you prefer that because it has uh, more frequent winners and all that. So you really want to do both.
okay,
Uh,
good to know. I will do that.
yeah.
And then kind of from the PRX crypto class, how do you know if it stops working? One of the things they really talk about is using the market system analyzer and the Monte
Yep.
Carlo forward-looking cone. I guess I know you're involved in that class. I'm assuming you're a fan of market
Mm-hmm.
system analyzer and that
Oh,
process.
I turned those guys on to that
Yeah.
15 or 20 years ago. Just an amazing piece of software.
Okay.
And what makes it really nice is it has a Monte Carlo feature on it and the ability to uh, model different outcomes of a standard set of trades using different kinds of markets money strategies. So you can monkey around with varying market or money management uh, and see what that does to the shape of the equity curve and all that. That's
Okay.
really an amazing piece of software.
Yeah.
So
And
yeah.
and okay, that sounds great. And the only other thing I'll just restate, I don't know that everybody was on yet, but we were talking about what systems we're using to trade. If any of you guys with the stuff you're looking at, if it does that multi-level, two rows for each trade, one's an entry, one's an exit, like TradingView does. And you're interested in that software that can flatten it out, you probably have to modify it a little or have ChatGPT do it, but I'll put that out for you if you're interested. So just let me know if that would be worthwhile. I'm basically going to use it to flatten it out so I can then drop it into the spreadsheet that we all use to calculate our trades. That's all I have.
Yeah, I think we're looking pretty good. You're on the right track. I would say take a close look at George's work on the SWOT analysis. He's got a great start on that, showing what that looks like fully laid out. and I'll
Where
have
is that?
some more.
Is that out there
Uh,
somewhere?
well, he just he sent me a copy of it. I just asked him to send you one.
Okay.
I'll send you a
I'll put
picture
my
of it.
contact information in boot camp, guys, if y'all want to do the same, we can collaborate that way maybe.
Yeah, I can share it in boot camp.
Okay.
I mean,
If you do
basically,
that'd be great. And I'll put my email out there too, if anybody wants to send me some private stuff. So thank you, guys.
Great, awesome. Chi Wang, I got you next on my screen if you want to go.
Okay, let me share my screen. Okay, are you seeing my screen?
Yep, got it.
Okay, so I have as we discussed last week, so I analyze on my trades. So what I found is that basically 87% of my overnight trades actually they are winning position. And also even though it's only 8% of the total trades, however, it contributes 80% of the total R. So so it's a good plus for overnight trades. And also one thing I want to highlight in details is about the basically almost all of the overnight trades happen during the during the November phase, whereby basically we can see that basically last December we can see that the market actually is run with a lot of following through. So a lot of my trade actually being carry overnight, and basically I also earning quite a good R from there. So and my psychology back then is that because when I started this way, basically I feel quite good about this one, about this system. Then I start to wondering by because of the I know that basically I'm getting a good return because of the I'm aligned with the market. The market is good with a lot of following through. I start to a bit worry is that what happen if I'm not aligned with the market, or the market is a low no following through, like because of December kind of is a low volatility month. So and also like as because of this psychology, I feel a bit worried about carrying overnight. So I have this basically reduce my MMRB, my trading stop from the R3 to the R4. So kind of make a more tight stop. And what happened is that basically after this, I kind of very little trades are being carried overnight, and also a lot of them also being stopped up. And so my performance, as you can see here, is kind of not per se not good, but it's a kind of a flat uh, performance. So so right now, my next basically what I'm thinking currently is that I'm thinking to increase back to my the R3, the MMRB, the R stack divided by 3, and so that the position sizing also will be reduced accordingly. So it's also better for my psychology to carry overnight because of a smaller size. And yeah, so that will be my next actions. So this will be the step for the overnight. So basically you can see it's a 20 winning trade is 87%. So total actually is a 26 R. Yeah.
Let me ask you on trade 261 to 287. What's the time frame that hits?
Also 30 minutes. Oh, 30 minutes.
Yeah. When does that winning streak start in terms of time? Is that in January?
Early January,
Okay.
about I think first few days, 1 or 2 days of January.
Okay, because there was a resumption of some upward movement
Yeah.
in early January, and that probably just reflects
Yeah.
that there was indecision in the last half of December and the first week of January, and it's kind of resolved to the upside. So that
Yeah.
makes sense. Is it still the case that in that last run that most of the profits are coming from the swing trade?
Yes, all these are the swing trade. Yeah, the 30-minute swing.
Okay, this equity curve is only the swing trades?
Correct. Yes, all are only the 30-minute
Ah,
swing.
okay.
Yeah.
All right.
So yeah. So I can see that basically this 30-minute system is very aligned with the market. When the market is good, it's really it can run. And uh while it's like in the sideway, because later I will also highlight that most of my losses actually come from trading inside the sideway. I mean the quiet as the sideway quiet. Yeah.
Yeah. What kind of rules do you have for holding the trade overnight?
Uh,
Hmm.
because I can only monitor in the morning session, so basically I can only trust the trading stop.
Oh, okay. So you're not. So these always started off as 30-minute trades, and it was carried overnight as long as the stop was not hit during the day. Is that correct?
Correct. Yes.
Okay. All right. Now is there another set of trades then for the other 20% of total R um, that are not 30-minute trades?
All are 30 minutes,
Okay,
but
all
it's
are 30 minutes. I get it. And so 80% of your 30-minute trades uh no, I'm saying that wrong.
92%.
Yeah, what percentage of the trades are being carried overnight and how many are exiting early or exiting that same day?
Uh,
The ones that
8% is
exit, yeah, let me say
yeah,
it in a different way. Um, what percentage of the 30-minute trades are hitting their trailing stops before the close?
92%.
Okay. And and that 92, oh, okay. So only 8% are still live to carry over overnight. Is that,
Correct.
is that right?
Correct.
Ah, okay,
Yes.
got it. And that 8% of trades is contributing 80% of total R.
Correct. And I would say why is a bit low, surprisingly low. Not really surprised to me because why analyze now is that because of I cannot monitor during the afternoon, so I can only based on the trading stop. So especially during this region, I kind of hesitating to carry overnight. So I might close the trade earlier. Yeah.
Yeah, that was I was going to end up getting there saying if you were having any rules that said in order to carry it overnight, I must have achieved a certain amount. Otherwise, cash it. Like I don't like to carry a flat trade from the intraday overnight because I feel like there was no evidence provided during that day to justify taking the risk of a gap. But if I have a cushion of market's money, and if there are no other reason not to hold it, then I may hold a winning trade overnight, but I'm not going to hold a neutral or losing trade overnight because what I want to see is positive gains today to be an affirmative reason to hold it overnight for the next, for the next day's gap. That's kind of how I'm looking at that. So that's why I was wondering if you had additional rules for holding it overnight.
Yeah. But looking at my situation whereby I cannot monitor it, so I would think like this would be the best trade-off, I would think.
Yeah.
Yeah.
Well, I think whatever the rule set is, it's looking okay. I mean, you've got
Yeah,
a
yeah,
nice,
correct.
yeah, you get reasonable numbers, and even when uh, it's not in alignment with the market, if the market is not ideal for that kind of trade, it's still looking like the the relative gains when it's working to the relative losses when it's not aligned is really favorable.
Yeah.
So
That-
keep taking the shots.
yeah, correct. That's why I'm thinking it no need to be perfect. I mean, it's just need to be good enough. So I think this is a good enough rule for me. And it most important is that it fit my situation. It fit my psychology and fit my situation. So I think it's the best fit for me.
Okay, that looks
Yep.
reasonable to me. I mean, that's a good. Those are good numbers.
Yep.
And what's
So
what are the population of targets for this? Remind me, we're using the same symbols I am on the swing portfolio, the
yeah,
hybrid swing,
correct.
Okay.
Yeah.
And what patterns?
Mainly is the three pattern, the SSC, CD, or the ED.
Okay,
Kind of two. Yeah, mainly is this three pattern. So
okay.
yeah, so maybe here I also can highlight is that basically I will look at the market and also and the sector. So like if the SLK sector on the day is the best sector, basically I will focus on the technology
Yeah.
trades. Yeah.
Now let me
So
ask another one. How many of these trades are short side trades that you're carrying overnight?
not that many, not that many.
That would
Yeah.
be the only other thing I'd ask you to look at like this week is
Uh,
um,
okay.
in a bull market. I am less fond of uh, carrying short trades overnight because I just feel like it's against the tomorrow on average is up in a bull
Mm,
market, and so if I have money on a short side trade intraday, I don't like putting that at risk for the next day because it looks more like an opportunity to buy on dips because it's in a bull market. So every sell off looks like it attracts buyers for tomorrow, which then defeats the short side swing trade. So take a look at the behavior of short trades in the overnight session. See how many of those gave back. It may be the case that you had uh, only hold overnight in the direction of the market condition.
mm.
In this case,
Yes.
only hold belongings. Just see what that does to the numbers.
Yeah, I totally agree on that. So I also tends to carry a long trade, while for the short trade, I kind of don't really will carry on. Yeah, based on the market.
How many of these are lasting more than 2 days?
No, none of them. Only one day.
Yep. That's been
Yeah,
my experience too, that the 30
yeah,
minutes seems to get, if you get 2 days in a row of really strong directional moves, I feel like, okay, I got the move. Uh,
yeah,
if I get to a third day, I'm really kind of surprised. And maybe
yeah,
that's just because of the way the market's been since November, but it just seems like there have been 1 to 2 day price anomalies that give us a swing and locks it in, and I'm happy to take my win. Um, Especially on this one, if you looked at um, if your average win is 1.16, and do you know what the standard deviation on that is? probably
Uh,
0.9. Yeah, I would just say if you got, oh, well, 1.39. I would just say, yeah, if anytime you get over 1.5, I'd be looking at saying, hey, that's all, or even over 2, that's already an amazing kind of move. And I would be reluctant to give back an above average win by letting it run too long. I'd almost be content to say, I got my 2R intraday. Let's just protect that. So take a look at that as a rule.
okay, understand. Okay,
Okay.
I think next would be yeah. Last week also I'm looking at the lowering 30 average R. So I just want to confirm is that the lowering 30R is like dropping one data and adding another data, right? So it's not another 30 set of data. Is it
Correct.
am I
Correct. Yeah, yeah. Drop one, add one. Because you want to
correct.
see that thing evolving over time, and you can see on that one where the shift occurred and how quickly it shows you getting back um, into into alignment.
Yeah, correct. Which yeah, this is the during the December
Yep.
time frame, and then this is the beginning of the January.
Yep.
Yep. So maybe I think one action here is basically I also tends to over trading. So basically I have a 290 trades in 20 days. It's almost like a 15 trades per day. Yeah. So and also a lot of trades actually happen during the first 30 minutes when I found that basically a lot of time I getting reverse and then being stopped out. So I
Yep.
think yeah,
I would
will
agree with
be
that. Almost, the majority of the times you're not going to get a single directional move from the open. That's um, it's less than 40% of the time do you get the opening at an extreme of the day. There's almost always an opening burst, and then the rest of the day once the smoke is cleared. So I think that makes sense to wait for the second bar.
uh,
Yeah.
because the second part will be like the quick flop. Wow, if we wait for 1 hour will be the flop system. Uh,
Yeah,
because
it's like
sometimes
it's very much like the quick frog.
yeah.
Yeah, I don't think that'll hurt you, to be honest. I think that the it avoids some of the crazy volatility in the first 30 minutes. Gives it a chance to pick a direction. Now, are you still eyeballing these to make your decisions?
Yes,
Like, are you
still
scanning them? Are you getting signals and then confirming and then trading? Or how are you choosing from among the symbols? Are you watching all of them or are you using alerts?
I just eyeball watch. Basically, I will check the market and then check the sector. So if the market is up, I will check for the sector, the strong sector, and then
Mhm.
I will sort by percent change. And then
Mhm.
from the top, I will check if the market is up, I will start from the top gain. Then if the sector like SLK, then I will focus on the SLK sector, stock.
Okay. Yeah, I mean this looks reasonable. I think those are legitimate actions. The um, now the avoiding the SQC, yeah, trading it when it moves. Yeah, I would look if I was going to sharpshoot that. I would say if the SQC resolves in the direction of the market conditions, so we're in bullish normal, SQCs that resolve to the upside seems like they would do better.
So
And
maybe
then
when
I
it
would
come out from
also,
SQC.
the other thing I would look at is start thinking about trade location on the 10-day. Like if you get something that is oversold on the 10-day NDX, I would really favor those as entries when I get the favorable signal to enter. But if I had too many to choose from, I would want to start off with the thing when it's already oversold. And now there's room for it to have a 1 or 2 day recovery move. So what that'll often get you is getting ready to trade on the long side, the biggest percent losers from today, because they probably sold off and are now approaching oversold, but it's a bull market, so you're buying on dips. Then the next day you start getting the reversal up. That's going to look very much like the channeling system with 30-minute bar entries, and I think that's going to help too. So make a note to start thinking about that. If do you have the channeling system rule set?
I think I have.
Okay, yeah. I think that's a case where the swing condition that it's in. Simple rules is that on a 10-day NDX, it's oversold. That makes it a more favorable trade anyway. And then if you get a 30-minute bar signal to get in, that gives you an extra good target.
Okay, understand.
Yeah. Okay, I think you're in good
Yeah,
shape here.
okay, good. Yeah, thanks. Thank you.
Oh, here's the other one. I think Griff Cooper sent me a quick look at looking at market classification, and I sent it to Juan Carlos, but it's also he was taking a look at the Bollinger Band mean and the RL30, and I'm going to send all you guys that. No, it's a nice little study, and what it basically says is, if I can draw that before I forget, where's my?
I'll stop sharing.
Yes, stop sharing for a second. Trying to find my. So I need to share a screen here. Share screen. Yeah, and bottom line was that if you have if this is the Bollinger Band mean, that's the 30 period. Imagine the river is on there. If you get the RL30 in black, goes faster. So the idea of the owl pattern is that you had some sell off, and then you got the RL10 reversed, and everything is going up, and then you have some SSC entries in here, and you're good to go, and you got some kind of risk box. So that's the first three criteria of the owl is that you had a harsh winter, the RL10 reversed, and then it crosses the dragon. So that becomes the SSC. Well, the owl entry requires that the dragon rolls up. So you're looking for this moment when the slope of the dragon goes from down to up, and then the fifth criteria is when the RL30 rolls up. And that usually happens after the dragon. So this is criteria 4 and that's criteria 5, and that's what gives you the owl. So one of the things that we noticed was you end up getting a little bit later of an entry in the owl, but you get a confirmation that the move is really happening. So what I asked them to do was take a look at the RL30 versus the SMA 30. And what you really want is this signal right here, that after a period of downward movement, you want to be long when the slope of the RL30 is positive. In other words, it's improving. But where you really want it is when it's also when the RL30 is greater than the SMA 30. That turns out to be a really positive moment. So, so if the river has started to slope up, that's good. But what you really want is the RL30 has bottomed out and is now on its way to improving. And then the signal that really dominates is this one right here, that the RL30 crosses the SMA 30. So if I draw that with red so you can see. So that's what the river looks like. And what you get is that this is kind of the end of the downward slope. And then the RL30 has rolled up finally. And the extra confirmation is when it crosses the river and continues to go. So what he did was lay that out over a year-long chart in the S&P, and then this was really when you got all the favorable returns in here, and then where it starts to get a little problematic is when the RL30 peaks and it starts to decay, but the river, which is slower, begins to go like this. So this was the window in which you're getting warnings. It was still okay, but you better make sure that your stop is where you want it. That would be the one where if I already have an above average wind, probably lock it in because the wave is starting to crest. But you can start. This is a good place to begin entering. This is your prime growing season here. You want to be in that trade that whole period of time. But then when the RL30 has reached a peak and is rolling over, this is where you're starting to see owl patterns on the way down. And then if it crosses over the middle of the river, that move is clearly done. So I'm going to share that here later tonight. I'm going to talk about it in the nightly podcast too. But he did a nice job showing a summary of some rules and results on the symbol on SPY. And that's going to be pretty strong information for the symbols that you're trading to. And then for Juan Carlos, sent that to you because that actually looks like a pretty good market classification for swing trading. So this is using daily charts, daily bars. This is that ideal. And if you take a look at this, if you could imagine how this looks a lot like the MACD for seasons too. And we love to see a harsh winter, a spring, and then this almost feels like the summertime. You want both of those 30-period moving averages both going up at the same time, and you want the RL30 to be above because that's the faster one. So you're on the front end of that turning point. and then it rolls over to show that the run is done. And then this is where the sort of the official endpoint. So I wanted to share that. Okay. Okay, anything else for us?
That's all for me.
Two more.
Thank you.
Good to go. Okay. All right. All right. Let me shut that down. All right. Who's got one for us?
I can go next.
Okay. Juan Carlos.
All right, let me share my screen. Where is it? Show, here. All right. So I'm gonna get my notes for a second. Here it is. All right, so I concentrated all these weeks on market classification. It is something that I always read about and I looked, but I never studied or took my time to understand. And I got many aha moments working on this. And one of the biggest learnings that I had is that in market type, the different market types affect the averages differently. So I never understood why they were lagging the indicators started to lag differently in different markets. Obviously, the speed of the change, but I never really correlated it to something that I could use to select the strategy. I always try to optimize the profit taking to match all market classifications. And then I ended up with like losing systems in that matter. So what I started to see was that in bear markets, as volatility starts to grow, the speed of the move is faster and the averages take more time to adapt to the move. And then we start getting the lagging, and then we start getting bad entries or bad exits based on different averages. So that was like huge for me to see that in action. What else? My indicators, faster markets. And yeah, so I ended up selecting for market classification as a global thing, as the index itself. I decided to go on a daily chart and decided to use the combination of risk C, the NDX, the slope stat, which is incredibly consistent across all like types of markets, and 200 moving average to do the classification when it's bear and when it's bull markets. I created several other indicators, but what I understood is that those are better to be used on the targets. So first, I select what's going to happen tomorrow, and then I select the type of strategy or the type of trading that it's going to happen tomorrow. And then I apply the other market types, like, is it a sideways market? Is it a harsh winter? Is it all these other types on the target itself? So pretty much that. I intend to work next week this week towards next on identifying risk reward. That's another area that I've never investigated really, and see what the market can offer at different market types. So at the end, I ended up with this, which is the risk C, which we've seen before, the NDX, trying to find where it's overbought, oversold, or it's in a breakout, or it's in the middle of the move. And I'm gonna stick with the slope stat on the RL90 and the RL30 with a small, like the baby dragon, like a small moving average to find the turning points. And then these crazy white lines, it's the 9-bin classification. volatile bear in the bottom. And if we see up here, that's the 2% line. So it briefly touched the bear market and then going up all the way to volatile bull. And so I intend to use, and I don't think I showed this on the previous session, is that I went and took the return if I left the position open tonight and how much would have been if I left it open. So I snooped the data and I brought it back to see visually in indicators what would happen if I would have left it open. And then I did a spreadsheet trying to do the expectancy in the different market types. And not sure if that's going to be automatable. Like, should I leave the position open because the expectancy of this market classification is going to be up gap or a down gap? And I'm currently looking into that and see if that could be incorporated into this model. And yeah, this is what I got. Another indicator that I really liked was the one to analyze the sideways markets, which is NDX 5, I believe. Class, classification, location, tal vez. Yes. So using the NDX 5, like you said, I did like 30 sections of 5 days.
Mhm.
I took the width of each of these sections, took the average, the standard deviation, and I did the C-score. And it's like, it points out the sideways markets.
Yeah.
Very accurate.
Yeah, it's I think it's a great way to pick those 1, 2, 3 day moves. Is when you had 5 days in a row collectively, and it's still abnormally quiet. I mean, that's about as sleepy a bear as you could ever want. That the young guns are itchy to trade it or whatever. Um, and I just think that there's something magic in that the 5 day compression, if I could put it that way.
Yes. And coming out, like in this case, we got like 10 days there sideways and suddenly, poof, it just took
Yeah, there
off.
was, many years ago, I remember Larry Connors did something with similar. He called it the narrowest range of the last 4 days. So all other things being equal, he really liked that today as a setup day to start trading tomorrow. If today was also the smallest range of the last four, meaning that today had compressed into a really tight range, and it felt like that was the pause that expanded. To me, the idea of a 5 day segment that is abnormally compressed, it means that nobody was making any money on swing trades. How long could that last? I don't know, but I just felt like that's why that was a crucial trend leading indicator of potential breakout moves, was that you had abnormal range compression for 5 days. That's the basis of that idea.
Yeah.
Okay.
I had a question to finish up.
Yep.
Is I was looking at the risk C and I was able to correlate when, risk on, risk off. This is, coming down, starting to go up.
Yep.
Since, what is it? Beginning of January.
It's been abnormally, nothing. Yeah.
But the
It's right around the zero line. There's really nothing to see there. It is the absence of volatility, which says that when it's compressed that closely to the zero line, you're starting to anticipate a volatility break, but it just doesn't give you a hint about the direction. The market's been relatively flat if you look at the last 15 days. It feels like it's waiting to expand, and that's one of the features of January. You know, January is always a strange month because you have all of the annual rebalancing from the last year has now been completed, and you got a bunch of new money that came in from the January paychecks and the post-Christmas bumps, and everybody's kind of looking around to see, well, what's the new year going to bring? So you get sometimes big moves, but little follow through in January. You get a lot of false starts to see who are the new leaders going to be, because allegedly people were taking the excess profits from last year's winners and rolling them into last year's losers. So you get a re-leveling. But now January is over, and we're at all-time highs, and now you would expect to say, well, I guess they can get to work now for this year. What's it going to be? And so the Risk Z is warning that don't be surprised for big moves in either direction now that we're through the January timeframe. That's how I'm interpreting that.
Well, cool. Thank you.
Okay.
Yep. Besides that, I'm good.
All ready? Okay. Who's got one for us?
Yes.
I can go ahead and go next.
Okay, Jonathan.
So this past week, if there's one thing that I want to get straight, it would be to get really clear on what to trade and how I'm selecting that. And so this past week, I implemented a number of the things that we had talked about over the last week, as far as how I'm setting up my platform. I have the way I have it set up right now is I've got I'm starting with a universe of 8 stocks, so that I'm limiting what I'm looking at, and then I've got the 3-minute charts for each of those. I've got a list of the big stocks so I can see the percent change on the open. And my prep the night before is to go through those 8 to start with and look at them on the daily, the 30-minute, and the 3-minute, mark out the daily high and the low, and kind of get a sense of what's happening on the 30 minutes. And I'm really trying to figure out what the minimum it is that I need to see to decide what I should be looking at that day. And I think one of my bugaboos is looking across time frames, because I mean, if I got the 30-minute and the 3-minute lined up, that's great. If I got the daily, the 30-minute, and the 3-minute, that's just really fantastic. But sometimes you get great trades on 3-minute when the 30-minute's in no man's land, and it could be moving counter trend to the daily. And so I get kind of caught up in maybe making it more complicated than it needs to be, when I may just need to be looking at the 3-minute. That's all I need to look at and see if I see a good pattern. But I'm relating that to at least where the daily support and resistance are at this point, and
Yep.
Kind of.
Are you looking primarily to be an intraday trader? I think.
Yes.
Yeah. Here, what I would say is, let me pull up the. I'm going to try to give you a simplified. Let's see. Where's my share screen? Wait for it. Let's see. I want to figure out how to use get a fresh one. Clear all drawings. There we go. Since I primarily want to be a intraday trader on this idea. I think the way I would look at that is this. So here's my open. I think what I would make sure that I have in this for the day ahead, I would want to know, what yesterday's bar, what the daily bar looks like, to make sure I understood where the mechanical entry is. In the mechanical stop. I would want to know those for sure.
Okay.
And then I would also add wherever the 10-day high and low was.
Right. I've got that.
And then wherever the opening was, let's just say that it opens here. And that means this is where it closed. And this is where it opened. So there's my gap. And then from here, I'm going to run up and say, I'm just going to guess and say that's what the range stat looks like. So plus range stat and the minus range stat. So that's really what my normal range of the day is going to be. The last thing that I would bring in from the prep is figuring out from inside here where the RL10s turned. I'm gonna draw it in blue here. So if the RL10s looked something like this, I would know that's the channel for the RL10s. So now if it opens inside here, if it starts going up, so now if I've got you got your eight symbols, and I'm organizing it by percent change.
Okay.
These are going to be your two biggest gaps up and your two biggest gaps down. If I got the market moving up, I'm still gonna take this trade, I think. I'm gonna put my my MMRB bracket on that. And then when it breaks out of that, I'm going to go long here, and I'm going to be ready to see what happens when it reaches, the peak of yesterday's part. That's really, either here or here, there's going to be very likely resistance. So if I get that signal to get in, I'm not surprised if it starts failing there, and I'm not going to hang around. I'm not believing this thing is supposed to work, and so I'm going to take the full 1 hour loss. But certainly if it breaks north of this, which was about 5 cents above yesterday's high, I'm feeling like that's really good. And now it has a good chance to get the positive range stat move. And then since you only have 8 symbols on here, I would look at the gain stat and the fail stat. You can get those on the daily report.
Okay.
And this is the average move of I think it's the last 30 days. From open to high of day. And this one is from open to low of day. So that's another one where you say, I know where it's going to open. And you could actually draw those boxes ahead of time. And when the thing opens, you could put that predicts something like, hey, this is where on average that thing has been moving from the open to the high of the day. And in a perfect world, if that was near yesterday's high and the peak of the RL10, if that thing moved up into here and started to roll over, I would definitely be ready to trade that thing short on the 3 minutes.
Okay.
So what these give you is probable turning points or unsurprising turning points. And then you always know where these are going to be. You know, the 1 day and 10-day high and lows, and where the turning points in the RL30 or RL10 are from the on the 30-minute bars. That sets up that's like the edge of the road that you're driving down here. I mean, if that thing opens up and it gets to the edge of the road and starts to fill, it's coming back. And you're going to get this kind of oscillation until that key price level breaks from yesterday's high and low. And then if it breaks out of there, your next one is probably going to be, hey, what was the range stat move from the open? And if it breaks through that, the 10-day high can't be far away. That's going to be the next upward move. So you're breaking through resistance to the upside. I'm always much more comfortable trading the confirmation of the barriers. You know, where there's 3 prices above, and I opened here and that thing went up. I'm not surprised if it gets there and fails, gets there and fails, or gets there and fails, and then I'm coming back to the Bollinger Band mean, and that's the trade I want to get. I just feel like that's an easier one to play. I don't have to believe in more optimistic guys coming in after me, that I'm getting it closer to the turning point, and I'm getting confirmation of failure. But that's the maximum number of things I think you need to have on there. I don't know that you need those two, but those are natural things to add, because it just gives you a feel for how has this thing moved in the past? How far could they move it before it got to its natural limit? And that'll give you some ideas about where the turning points could be.
So it sounds like.
Does that make sense?
Yeah, it does. I think it sounds like I'm getting too hung up on what direction the 30-minute might be going, or what direction the daily might be going, or the trend necessarily, when I really need to be focusing on the turning points, and I need to be looking at the daily.
I really think so. Yeah. On the intraday, that's really kind of the key, because
Okay.
every turning point means that whoever was day trading it, they got what they wanted, and it stopped going in that other direction. The closer I can get, I actually like to see a turning point. And my favorite one is in the bull market. Let's see.
And the daily turning
I
point
remember how to get it.
is the most important. If I'm trading 3 minutes,
Is the high
not really the 30.
yeah,
but
is the high and low yesterday.
Okay. Okay.
Yeah, the high and low from yesterday has real power, because everybody trading it today was also trading it yesterday. Why can't I trying to find my I don't use the whiteboard that much, and so I'm trying to figure out a damn oh, there it is. Clear all drawings. Yeah. Yeah, I just feel like yesterday's high and low, that just really established yesterday's battle space, you know. And then if you had something like the turning point here for the RL30, and it came all the way, that was the lowest low on a turning point. That sets up a channel inside yesterday's range. And then because of math, because of the way it's drawn, the dragon doesn't go as far as the RL10 does. So now you almost have another channel. So when I'm in here and it's starting to move that way, did it break above the high of that dragon? Did it break above the peak of the RL10? Did it break above yesterday's high? And if it can get through all 3 of those, this thing now finally It's free. It's left the reservation. So, so depending on where it opens up inside yesterday's range, that's the midpoint. Is it up in here and then hits this and starts to fail? Good. I can trade that way. My favorite one is that it closed here, but then it opened here. So there's my gap. And then I get a harsh sell off in the first 30 minutes. And then this holds.
Yeah, I saw a couple of those today where it
That's
makes
what
the
I
market-
love. That's the one I love because now all the guys who were happy about this upward move yesterday, they can buy on a dip. The low from yesterday is holding. Maybe this went from the open a fail stat and it held. And now I get a morning hook and a 1-2-3 entry and a WMB3 and then an SSC. And I got all this move uncontroversially to yesterday's high. So I make a living in here.
Okay.
So my favorite is always the big sell-off in a bull market. It's a bull market at all-time highs, and yet this thing sold off harshly, and then it's done. And now it gives me that morning hook. Well, maybe that was just guys who were selling because of yesterday's gains, and they're just locking in a long trip. So all the motivated sellers are gone, and then pretty soon the intraday move picks up, and you have a long move ahead of you just to get to the yesterday's boundary on the upside. I love that move. Where I always have trouble is when I'm close to yesterday's high. It closed like this. It opened here and closed here and gapped up to here. It is now starting to move here. It's like, God dang it. Is it really gonna break through, or am I just gonna eat that? And so I always have to hold my nose and take this one. This is the mechanical entry on a breakout above yesterday's high. Okay, I mean that's always a good thing, but if that fails, I don't stick around long, and now I'm back into the channel that looks like this, down to yesterday's low and wherever the Bollinger Band mean is, and that kind of stuff. So to me, you need to be executing on the 3 minutes, and then if yesterday's high was also near a dragon turn and an RL10 turn, and this holds and starts to fail, then you can start playing that move. And
Okay.
by that time, the normal patterns of the RL10 has crossed the dragon, and then you're looking to see on the downward move as it's moving down, has it crossed the VWAP? Oops, that should be the VWAP is orange, and then has it, and then normally it'll be the Bollinger Band mean 30. And this, when it crosses this, when it gaps up and then rolls over and crosses the VWAP, that's really where I pick up the downward bias.
Okay.
And then it's the Bollinger Band mean, the far side of the river, and off it goes. And,
Okay.
you should see a lot of that. When you listen to me talking through those 30 symbols on the nightly swing,
Yeah.
that's where that stuff is coming.
Okay. Okay.
Speaking of which, we'll probably get rid of those.
All right, that's good. All right, so I'm gonna focus on these daily levels. I'm not gonna pay too much attention to the 30. I'm gonna focus on the daily levels and execute that on the 3 minute.
Yeah.
And I've got those on
Yeah,
my.
I think so.
I'm just looking at the 3 minute chart and I'm gonna,
What I would be looking at on the 30 minute, you see where the big turning points in the last couple days were at on the RL10. Just know where those are. You can see those, and those are. It's not unusual for those to be important. I would take a look at those.
okay,
Hey, what I want to say for George, I love the SWOT analysis you did. Okay, so you have 4 categories of things to do. This one was like strength and weakness. This was opportunities and threats. So in this category, category one, what you're doing is you're looking to get a personal strength on an opportunity for a big win. And so that was things to do in here. And then the second category is things that you're weak on where there is a real threat of pain. So there were things to do to protect against that. And then 3 is something like, here's an opportunity to fix an internal weakness easily, maybe partnering or doing a checklist or modifying a rule. And then 4 was, what do I have to do to use my strengths to prevent disasters or something like that. Each one of those is now a candidate for a project or a task to do something. And what we want to do is now pick the ones that matter. And so I'm going to borrow some ideas from Brian Tracy on this one. And his idea was, look, if you made a list of the top 10 things that you want to do, take a look at those and say which one has the biggest reward, but it makes the biggest difference. So hey, it's that one. And then make a plan to do that one, identify it, describe the outcome, big steps along the way, the resources I need, timeline, what new addition, almost the same things that are on our chart, and say, that's the one. You build out that plan. The other ones, hey, I could build out a plan if I wanted to, but I really want to get the biggest one. So what I want you to do now is, as you take a look at all 4 of these lists of things to do, pick the one from each one of those categories that looks like it has the best payoff. And I want you to look in priority. The one I really want you to focus on is what comes out of this first category, strength versus opportunities, because that's probably the biggest win. These other ones are reasonable, and I would just say, are they easy to do? Like it doesn't cost much, and I could get that done without diverting attention from this thing. And then I would pick, so I'd narrow that big list down to 4 things, and then pick the one that you want to build out. And I'd be surprised if it wasn't this one was the biggest. It may be the hardest one to do out of those 4, but I would say make that one kind of your primary, and then pick the best one out of each one of these 3, and then pick the ones hopefully that are the easiest to do, and then make your priorities 1, 2, 3, 4, with the idea that I'm really going to make my strong effort on number 1. But when you get tired of that one, say, God, I've done everything I can do today, I need a break, whatever. That's where 2, 3, and 4, you can shift to those. And this actually builds up a little energy for the other one, because you can shift your focus and bring new energy. And what that does then is you now have a comprehensive list of things to work on, but it concentrates all of your effort on the highest priorities and focuses your attention on really building that out. So I'd like you to give that a try. I would take into account some of the things I was talking to the guys about, Jonathan, about the intraday piece and the 30-minute bars and all that, because I think that's close to what you're doing as well. So there's kind of the same guidance to you on that for execution.
Okay.
Does that make sense?
Yeah.
All right. If you want to share that real quick, we could take a quick look at it. Let me lock the rest of the room here, so keep the strap hangers out. Security. Enable.
So this is the SWOT analysis. I posted this in Basecamp, if anyone's interested. And yeah, not really much to say about it. I guess the big aha for me is I knew about SWOT analysis for many years now, but I didn't know about it in this way, and doing it this way just made a ton of sense. So I was super excited about that and really got into it. And as I mentioned before, the real aha moment for me was that as traders, one of our biggest threats is giving up because it's so difficult to become a trader. And this actually sort of mitigates that threat. This is one good way of mitigating that threat. So I thought that was really cool. I'm not
Yeah,
sure
like
what.
on this one, if you're looking at the get the big wins, now a lot of these look more like attitudinal ones than specific trading techniques, which is fine. Um, I'd like you to take a look at the strength of programmer and systems thinking. Is I think what you have in under the get big wins is a more specific one that says lock in very explicit trading rules. And this is one where I think you and Jonathan have a natural alignment on what you're trying to do because you're both active traders intraday, bouncing between 3 minute and 30 minute on standard symbols. I think that there's some clarity that you could use your strengths as a programmer, systems thinker, logical thinking with interactive processes and repeating processes. I think what I would add to that is I would operationalize those and say I want to get a very clear, explicit pseudocode for my trading strategy. That's what I would do on that. In the get the big wins. When you do that, if you go over now, look at overcoming the enemy using programming to automate, converting actions to rules. You're actually using your strengths now to defeat the uncertainty and the newness of trading. So I think that those actually have some synergy. And it may be that the right thing that maybe that's where the priority is. I'm going to use those strengths to simultaneously defeat the threats, but also it's also starting to improve of things in the get the big win. It will lead to the big wins once I defeat the enemies in there. Under the mitigate witness or weaknesses, mitigate the weaknesses. I would take a look at the physical plant in there about less sugar, more protein, active activities, combining learning with other activities like stretching notes, and I think I would establish a reasonable, achievable, not overly optimistic, but some very specific physical things that you want to do each day to build in gains, like whether it's number of steps, putting a little buzzer on it so that every hour you're taking a break and getting some steps in. I remember R.J. Hickson was using a treadmill that he had modified to put a desktop across it so that he could do some walking while he was just watching. He could he could get his steps in while he's uh, watching the things setting up for him. And then under prevent loss, I would say there's a systematic process in there for AARs about chunking the results by week, using statistics to reduce random outcomes. I think that just is, I think it's building out the same analysis tool like Chi Wing Chong is doing with just building out your data catcher and starting to build out the histogram and the coin flip and the rolling 30 trade expectancy, that kind of stuff. I think that also leverages your systematic nature, which is a strength. So I think that one sort of, we want to get that right now early so that we can start tracking performance through time now, because you have enough data to start doing that. So I think that would be more than enough for the week ahead.
Okay.
Okay, that's everything I got for you guys today. I have us at 8:30. There were some really good discussions from the weekend. I think the weekend FAQ from Sunday was on the VWAP. It was pretty well done. So the Sunday lecture and the Thursday night lecture were both really pretty good. I'm trying to use those times, to be honest, really to fully articulate some of the things you guys are raising up and causing me to work on. So I'm remembering to put those in the small group as well as in the foundations course. So you might see some double dipping in there, but that's all right. All right. Any final comments from the gang before we hit it? Okay. Yeah. Remember, don't stay stuck too long. Send me notes when you got them, or you need a nudge or whatever, or to lock in some ideas. Hey, is this what you're looking for? Or how about that? Don't hesitate to send it to me. All right. All right. Well, take good care, guys. I'm gonna turn this off so that it'll process the video and then start it up again shortly for the team. Okay.
I appreciate it. Thank you.
Yep. Take good care, guys.
Thank you.